Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. This channel continues to grow because of people like you. And if you are new here and you have never stopped by the channel before, welcome to the channel. And on this channel, we cover dividend growth investing. I do portfolio updates like this every Sunday morning, full and transparent, out in the open. Nothing, no paid places to go, no paywalls to get through. I don't have a paid Patreon account or any courses to sell you. I just show you what I'm buying every Sunday morning, any of the stocks that I'm buying, selling, any options that I'm into, all out in the open, fully transparent. I just want people to be able to see that a normal person can build out a portfolio. For those of you who may have not have started your investing journey and may be looking into dividend growth investing, that is what I cover here. I am a dividend growth investor. I do have other accounts, but on this particular channel, that is what I cover. So we did add $1,764 to the portfolio. And if you are new, hit that subscribe button down below and join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors to share our experiences. Stocks that we're watching, I do a stock pick of the day series Monday through Thursday to take a look at a company that's pulled back on the day and see if there's any value. I also do monthly videos where I cover the stocks I'm looking to buy for. I just did one, stocks I'm looking to buy in November. If you haven't checked out that video, go check it out. And tomorrow on Saturday, well, you'll see this on Sunday, so yesterday, on Saturday, check out the video I did on the dividends and options for the month of October as well. So again, hit that subscribe button down below, hit the notification bell, drop a comment, let me know what you added to your portfolio this week. A lot of green in the market this week. Stocks are really rebounding. Looks like they really liked the Fed pausing on their interest rate hikes. So that has really driven the market up. I would not be surprised if we saw maybe a bit of a pullback sometime next week. But for right now, a lot of green in the market. So hopefully you took advantage of some of the sales that were out there. There still are a lot out there. So let's jump right in the video and see what we added to our portfolio and all the activity in my portfolio this week. So we will start with options. We did have a couple option plays hit this week. On October 30th, we had one contract for NextEra Energy. We've been running a wheel on this one, right? Cash secured put this time. We've been doing covered calls whenever it's a sign, and then a cash secured put, and then a covered call, and then a cash secured put. So we've been running this wheel on NextEra Energy for a little over a month now, and we're going to continue to do so. We received $234.46 in premium. Very nice to see that. It's for a November 17th strike date, the closing date, with a $57.50 strike price. It is higher than this. I might actually look to get out of this one on the day it pulls back. Same thing with Bank of America. 3 contracts there with a $27.50 covered call on this one. And again, I probably won't look to get out of. I might look to get out of this one because I don't want these to get called away. If it runs up much more than where it's at right now, I think it's at $28 per share. If it goes up much higher than that, I'll probably look to buy out of Bank of America. The put, not so much. This will expire worthless by the 17th here if it's over $57.50. No one's going to, I won't be selling it at that $57.50 price there. But cash added $265.88 total. Now, first dividends for the week, November 1st, 2023, we received $373.21 in dividends, and we received those dividends from ticker T, AT&T. This is out of the communications sector. We received $97.03 from T. And with those funds, we have the drip set, so it automatically goes back in and buys more shares of whatever company pays out the dividends. So in this case, it's AT&T, and we picked up 6.21346 more shares of AT&T. Verizon Communications, also out of the communications sector, ticker VZ, paid us $200.62. Awesome to see that. I mean, I'm getting pretty excited by these payouts now. $200. The next one will be over $200 as well. So very nice here on the Verizon position. This one has actually run up quite a bit as well. It's back in the 30. We bought it here at 35. I think it even hit $36. But with those $200 we received, we bought 5.65476 more shares of Verizon, and CVS, ticker CVS Health Corporation, ticker CVS, out of the healthcare sector, paid us $75.56. All total $373.21. And CVS, those 75.56 went back in and bought 1.12747 shares of CVS. So with the new shares picked up from the dividends we received, we add an additional $24.65 in passive income over the next year. So this is that dividend snowball. This is what the dividend snowball looks in. These positions are already in the portfolio. They are paying dividends. Those dividends are buying back more shares, and those new dividends are adding more income, right? That is the dividend snowball in effect. And as I add to CVS, AT&T, and Verizon, as I add some more to those positions, that will make that snowball grow even faster. But even if I don't, it will continue to grow, because now it is a machine creating more dividends, dividends creating more shares, shares creating more passive income, and rinse and repeat. Now we get to the first addition of new capital into the portfolio. On October 31st, we added part of this $103.66. This was part of the options premium that we received. We went ahead and put it right to work, $103.66. With those funds, we bought 4 shares of Haverty Furniture Companies, ticker HVT, out of the consumer discretionary sector. Those 4 shares added an additional $4.80 in passive income over the next year. And we weren't done. We added our biggest tranche on July 2nd. I know it says October 27th. Disregard that. It's actually on July 2nd. We invested $1,661.09 in new capital into the portfolio. And with those funds, we went and we picked up more shares of Medical Properties Trust, ticker MPW. This is a REIT out of the real estate sector. We picked up those 9 shares at $5.11 per share. Nutrien, this is on my stocks to buy for November list. I am going to build this one out a bit more. We added 4, and we started this week. We added 4 shares of Nutrien Ltd, ticker NTR, out of the material sector. This is a Canadian company, so there are some implications around the taxes on this one if you are interested. And those 4 shares cost us $55.27 per share. CVS, not only did CVS pay us dividends, but we added a little bit more to that position. We added 4 shares to CVS Health Corporation, ticker CVS, out of the healthcare sector. We picked up those shares at $68.82. Johnson & Johnson had really pulled back under $150. Can you believe that? So we went ahead and we added 2 more shares of Johnson & Johnson, ticker J&J, out of the healthcare sector. I know. I said whenever I got to 100 shares, I was going to back off a little bit. But under $150, I just could not contain myself. That was just too much. I had to at least add a couple more shares. So I may be done with Johnson & Johnson, but if it stayed in the low 150s or dipped back under 150, I might nibble a little bit more as well. But this is getting to be, in all seriousness, it is definitely the biggest position in my portfolio, and I really don't want any one position to get over 10%. So this one I really have to start watching here and start filling out some other positions, or even add another position or 2 to fill out, so that we can get this down a little bit so we can add to it in the future. But here we went back to Haverty Furniture Companies, ticker HVT, out of the consumer discretionary sector. We added 6 more shares. This one's run up a bit, and we added those shares at $27.51. You can see on a couple days before this, we were able to get them down in the 26 range. I like to bounce them. I really like them under 26, under 27, 26, $25. Hopefully this is not one that's going to shoot way up and kind of back us out of adding to it for a while. Cisco Corp is another one that I am trying to build out. We added 10 more shares to ticker SYY. This is out of the consumer staple sector, and we added those shares at $65.61. Another one that's starting to run up, though this one I'm willing to buy up to $70. Haverty Furniture, $28 is about my cap on that. I'm not willing to pay any more than that. That's where I kind of see, fair value, or maybe just slightly over fair value at 28. Really 26, 27 and under is where I really like it. But and all total, these new shares, the $1,661.09, adds another $60.23. So all total, we added $1,764.75 and an additional $89.73 in passive income. This is that dividend snowball. So now we are increasing our annual income by about a little over $89 $80, just under $90 per week. That's about what we are averaging. So think of that. You can do the math on that. Just do 80 times 52, and that'll tell you what we're averaging over a year in increasing our annual income. Very nice to see those increases week over week, month over month, quarter over quarter. Now let's run through the portfolio sector weights here. Communications makes up 9.6% of the portfolio. Consumer discretionary, starting to build this one out, 1.37%. Consumer staples makes up 7.27. Energy sitting at 6.59. We might need to add a little bit here to energy. Financial sitting at 9.93. Healthcare sitting at 17.70. So not only is J&J my biggest position, but I also have a bit of a rule here on the sector weighting. I don't want any one sector to be over 20% of the portfolio. I might let one go to 25% if a bunch of stocks in one sector are running up or something, and it's got to go to 25 or even 30. That's fine if they're running up and that's the reason. But I don't want to build out any one sector and make this a lopsided portfolio. The idea is to try to stay relatively diversified amongst the sectors and find the weakness in the sectors as the economy changes, right? Communications is down right now. It really seems to be a good place to be putting money. Healthcare is down right now. It seems to be a good place to be putting money. Financials is down right now. Energy has kind of run up, except for maybe Enbridge, but a lot of the energy companies have kind of run up lately. Consumer staples is starting to look more attractive right now. Consumer discretionary, especially if we run into a recession, will get real attractive. Technology, I haven't really been adding much to technology. Utilities, I just added the NextEra Energy, but everything pulled back. REITs are kind of pulled back as well, but technology is one that I'm not really adding to. Industrial is another one that I haven't really been adding to, but when they pull back, I will. But let's keep going here. Industrial sitting at 7.71% of the portfolio. Technology sitting at 8.28%. Materials sitting at 13.32, utilities at 5.49, REITs in real estate in third place still, at 12.74, and no ETFs. I consider this my own ETF. Not that ETFs are bad. If you don't want to do the research on individual stocks, I will say ETFs are the best place to put your money. Go find yourself an S&P 500 index fund or an S&P 500 ETF. Those would be the places, like a VOO would be a great place to go and put them. I have a couple ETFs in my daughter's custodial accounts. SCHD is one of them, and VWO, which is an emerging market ETF. Those are two that I have for my daughter's custodial accounts. They have some individual stocks as well, but primarily I just focus on ETFs for them. And here it is, what most of you are tuning in for, probably what you stopped by the channel for, my weekly update. This is my portfolio. This is a real portfolio. This is where I put my money in every week. So I'm putting my money where my mouth is. I'm not just talking about some of these stocks, and I don't just cover stocks that are in my portfolio. I really look far and wide to try to find value. These are just the ones that are in here right now. So you can see the ticker, what companies I hold, how many total shares, the current price as of the close of business on Friday, the market value, what they're currently worth, my average cost per share in this column, my purchase price. So what I have into that position, whether we're up or down in this column. If it's red, that means I'm down. That's just a good visual indicator. It means I'm down. Right here, the percent return, same thing. If I'm red, I'm down. If I'm green, and the darker green, the more I'm up. So right, I've got a mixed bag. Some of them down, some of them up. My best return is Williams and Sonoma. I only have 2 shares though. That's the only downside. I wish I would have really built this out whenever I was running a wheel on this one too, like I am with NextEra Energy right here, and it just shot up one day. It's like up by 17% or something just over a couple days. So I stopped running that wheel and just have these 2 shares. But whenever it dips back down, I'll eventually add back here. Owens Corning, another one that's really run back up. This one had dropped down to 20%. It's been as high as 50%. And if it goes back up to 50% gain here, I will probably look to trim some of this position. I might cut it in half and drop to 22 and then buy back in whenever it drops back down. But we'll see. Biggest losers, MPW, 37% down. SBSW down 39%. Here's the sectors that they each fall in, whether they're a quarterly, monthly, or semi-annual payer. Their current dividend yield as of the close of business on Friday. My yield on cost. The weighting, the previous slide, we saw the sector weightings. This is for each individual position where they sit. And we talk about Johnson & Johnson. Let's look at it real quick. Johnson & Johnson, with those 2 more shares that we added, since it's pulled back, it is down to 8.77% of my portfolio, right? But it's turned around again. I bought it for under 150. It's back to 151. When it gets back to 160, it's been up as high as 172, 175. So when it starts to turn around again, it will be over 10%. And that's what I'm talking about. I don't want any one position to really become a major weight on the portfolio. If Johnson & Johnson was to have a tough time or something, it could really impact my portfolio. And when it goes down like this, I'd be down even more. Just trying to stay a little bit diversified and not get too overweighted in any one sector or any one position. That's what I'm trying to get at. All right, and the estimated annual income in this column, payout months, what months they pay out here, dividend growth year over year, and where they sit at 15% of their 52-week low. Let's talk about this one for a second. And HVT is a perfect example, right? So I'm trying to build this out to 100 shares. I'm currently sitting at 72 shares, right? My average cost price is $27.28. It's just over my cost basis at $29.36. Am I willing to buy it? No. It's got to be under $28.59. I'm not willing to go any higher than 15% of its 52-week low. That's just where I put kind of the value that I want to pay for this particular company at. So at $29.36, it's not a buy anymore. So I would lay off HVT until it drops back under this $28.59, and then I would add a little bit more. And I know that's relatively goofy way to look at it, but you've got to have levels that what are you willing to pay? What are you willing to buy it at? What is it worth to you? You need to know that if you're going to be looking at individual stocks so that you are not overpaying. Owens Corning is another one. I would love to add to this position, but I would wait till it got down to at least, it's at 122. I might, if it was down to go down into the 110s or back into the 90s, because 90s over the 92.27, see? So it would have to get back down to the 90s. Not necessarily at my cost basis at 91.71, 92.27. That's kind of what I'm using, that 15% of 52-week low. All right, total shares sitting at 5,462.072. Market value of the portfolio is currently sitting at $177,214.93. I have $186,326.25 into the portfolio. I am down $9,111.33. But if you remember last week, we were down $14,000. We were down 9%. Look at that. Just in 1 week, the market's jumped from 9% down, or at least my portfolio, but it means the market has come back up. If my portfolio is coming back up, the market is coming back up as well. It went from down 9%, almost 10%, to down 4.89%. So a 5% turnaround in just a week. That's why I say every week, I don't worry about this. I'm not worried about this. I am buying future income. This current yield sitting at 4.822%. Yield on cost, my yield on 4.566%. But this is what I'm worried about. I am buying passive income, cash flow. I am buying future income. It currently sits at $8,545.01, and it goes up week after week, month after month, quarter after quarter, year over year, as I add more capital, as the positions in the portfolio pay out dividends, as they raise their dividends, and as I add more capital, this gets bigger, whether the market's up, whether the market's down, whether the market's floating sideways. That is why I do it. Even when the market is down, like it is now, I get those dividends coming in every week. As you saw, Verizon, AT&T, CVS paid me, over $300 this week, and even that came in even though I'm down, and I'm down on those positions, right? Still down on Verizon, still down on AT&T, but they still pay me those dividends even though I'm down. I don't have to sell any shares. I just keep collecting the dividends, and eventually that red will turn to green, as will all these other positions, and that is just how the dividend snowball will continue to roll. That is it. Really appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Come back and check out this portfolio growth week over week. Check out my Stock Pick of the Day series Monday through Thursdays, and check out the two most recent videos. We've got the video for stocks to buy in November that just came out on Friday, and since you're watching this on Thursday, I'm actually recording this on Friday night, but I'm going to put this to post on Sunday. But Saturday morning, I will do another video will come out. It will be the dividends and options that I was in for October. So check out those two videos, and we will see you in the next one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Have a great weekend. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can lose money and should never invest any amount not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.